All right, welcome back, guys. Welcome to another episode. Welcome to another update. I hope you're doing all right. I hope everybody's happy the way things are going right now. And of course, I'm pretty sure a lot of questions are rising up. A lot of people are right now wondering, where will it go? Where will it stop? Is it going to stop? There's a lot valid questions to be asking at this point. So let's start with a little intro clip because I all right, how cool was that? Yeah, very proud of it. I really like it. Let me know in the comment section below if you enjoyed this one. Now, here we go. What we are seeing right here looks very dangerous. Okay, so yesterday, what did I say? Let's start with this. When was yesterday? The 19th at noon. Yeah, we were more or less here. So yesterday, I did express how I wasn't expecting a turnaround right there. I was actually expecting more high, but on the other hand, the high to make this entire structure sustainable should be breaking 30,000. Now, is this still possible? Basically, technically, it still is possible. As long as we don't make another high forming a third bearish divergence, and that would be really bad. Right now we got two strikes. It's still savable. This is the 2-hour chart. On the 1-hour chart, RSI has already pulled back a little bit, so this is this is a good sign. But in order to pull back a little bit more, I do expect that we will have to see a little bit more ranging before we have enough people buying in, stepping up again. Now, ranging to correct the 1-hour RSI is not going to be enough. I do expect that this is going to have to be played out on one of the higher time frames, because just like here on the 5-hour time frame, we do see that the stochastics did break out of this this rising trend line, which also was easy to expect, because where else does it have to go? Come on. But more importantly is that on the 5-hour chart, the bearish divergence sitting here is actually completely not being resolved at all. At the very least, we would need to see RSI pierce under one of these areas, and knowing how and seeing how these areas are structured right here, I don't believe that this would be a complete resolving of the issue. I do believe that that RSI should be better off dropping below one of these levels for price to be picked up like really strongly. Just because, because RSI is. Bullish divergences. It's hard to see a local low in this situation right here. Okay, so on the high time frames, it is a little bit of a swipey swipe, but it's not really a local low. Well, arguably, I'm pretty sure if RSI. Please forgive me for this. I'm pretty sure that already dipping below this area would give the opportunity for price to start trying making a new high. But the problem would be that on this move up, we would probably just end up making another bearish divergence, and then we get 3 strikes, and it's game over. So for now, I don't believe a real breakdown is in the cards, but what I do what I would prefer to see is actually a better correction, something in the likes of one of these here. You know, this was a nice strong correction, and as you can see, okay, we needed a second attempt, a second retest of the lows, but this led to a massive run up. Is this still possible? Absolutely, everything is possible. This is land of cryptocurrencies. But now, first and foremost, we need to look at the levels and we need to do our technical analysis, because all this is just speculation. This is just my opinion. This is only what I would be hoping to see. But of course, many things can happen, and you need to keep your feet on the ground. What you need to do is make your analysis, do your calculations for all possibilities. Okay, have no biases. Don't be saying like, oh, I'm 100% bullish and I'll go all in. Well, you might as well go to a casino, and for that matter, and this is not what we do here. Okay, we really try to limit our risks and to maximize our profits, and I hope you're with me on this. So please follow through. I think this is going to be rather interesting to see what kind of numbers we can pull out of our hat. So without further ado, let's dive into the 1 hour time frame. And you know what? I'm going to remove these thingies right here, just all of them, like that. And we're gonna start from scratch. I'm gonna leave this wedge just because out of experience, we know that wedges often turn into, support, resistance areas often turn into support, and seeing how this is actually situated here on this large volume nodes protecting the lows, this could actually lead to a little bit of shenanigans, trending sideways, allowing RSI to cool down, and this would be a really rather good thing, right? But if we were to break down, where would we be expecting support kicking in? So number one, the first thing that we want to see first and foremost would be this one here. So this is 30, 27 and a half. Let's do 28 on the RSI. That would give us 22,600. So yeah, this is rather high, but this is a 1 hour chart, so this could be fairly possible. Let's just put a horizontal line right here. I think I'm gonna color code it green, because if we bounce there, probably just some trending, and come on, coordinates, let's do 610 like this. So yeah, bouncing on this one would be very natural as we are just trending sideways. Now, breaking this one, we are gonna have to look for lower levels, lower ranges, and this is where we are going to go to the higher time frame, and we're going to do the same thing on the same level. Just let's have a look and see what differences we pop up. 31.8. So 31.8, this would be 21,600. So you see, this is already a way lower number than we had before. More or less here in this area, and I said I was going to make this one green, right? There we go. Good, beautiful. Well, maybe for this one I would also take a look at this local low here, because the divergence actually played out between those 2 points, and let's just make a range out of it, right? Shall we? 22.9, and we got 20,070. So I'm going to make a box because we do like our boxes, and 20,070. There we go. All right, so maybe I'm even going to delete this one. Awesome. And now let's go over to the 5-hour time frame, and let's do that very same thing. Let's make a range. So 34.9. So yeah, interesting. This is going to overlap. We don't like that. So 20,800. This would be sitting here at the node. So yeah, let's go with a trend line here and make it a yellow one. Good, awesome. And now for the lower end, let's see, 27.5. 27.5, and that would be 19,300 and something. Nice. So let's set our red box right here. Now, this is actually very beautiful, and it is making a lot of sense looking at this structure. So what do we see? Number one, most importantly, what we see is actually the area where we could be trending if we're holding it. The area where already some nice strong support could be coming in, and maybe even we would see some trending, eventually trending down and then bouncing somewhere here on the intersection and then moving back up. That would be a really nice one, don't you think? But here, the red area, this is where trouble begins. In the red area, especially if we don't dive really steep down, we are outside of the trending area, the trending range, the rising trend line. We did break it, and this is actually already signaling a turn of behavior, a change of behavior. Now, is this still recoverable? I think in the red box, I would have to say yes, but it's not gonna be pretty. Okay, we are gonna have to see a signal, like a real confirmation signal, like a bullish, strong local bullish divergence, maybe with then a nice higher low over a higher low or something. Like, it's gonna be a clear signal, but we're also gonna have to keep our eyes on the highs to make sure that the signal doesn't just that the formation doesn't just blow continuation to the downside. Okay, so but all this is future talk. This is not going to be in the cards for today just yet, but you know, keeping our eyes on these levels is already a good place to know where to start your position, where maybe to add up on your position, and where to start letting go. You know, I'm not going to tell you what to do, when to do, where to do, but this is more or less how I would be setting up my my red flags and stuff, my flags, on this trading situation. Now, let's do a little bit of Fibonacci magic, and let's see if this corresponds more or less to the levels that we're seeing. So what do we see? The 0.5 lines up perfectly with the yellow chart, and you know, I'm doing this live. I had no idea where these lines would end up. I'm actually doing it just right now. So you see that sometimes these all these readings, they start agreeing with each other, and this is when you know that actually you're onto something that could have some validity. The 0.236 lines up perfectly with the green line. The 0.618 lines up with the bottom of the orange box. So yeah, all in all, I think that these levels do carry some weight and validity. Now on the upside, I'm pretty sure that not a lot has changed. Let's have a look and see, just to make sure. Let's go first to the 1 hour chart. Let's just read this one, you know, because having continuation on a bullish, yeah, a little bit, it's splitting hairs. You couldn't really, maybe if you would consider this the local low, yeah, there's some bullish divergence, but it's really splitting hairs. But you know, just breaking this high on the RSI would already signal some strength in the market and give way for more opportunities to trade to the upside. So let's just measure it out, right? So this one is sitting at 78.2. Whoopsie. Magic. 78.2. And what do we have? 24,900. So actually already a little more within the range, within the realm of reality. 29,000. What color do we give it? We give it blue because it's going to the sky, right? And then just to be very, very thorough, let's go do any one of these. Let's do an average in between these. 88.5. No, I'm gonna do this one, this side, on the higher time frame. Just because, yeah, you see there is a little bit more consistency on where the peak is sitting right here. So let's do this one, 76.6 and 92.2. So 76.6, we got again 24,800. Yeah, this looks like a really good level. And 92.2, and this is where we go really ballistic. Wow, 31,300. Oh my god, this is so high. But yeah, let's do this one also on the higher time frames, just because I think this read is a little bit way off. But yeah, nonetheless, already getting a higher high with this one would give us a little bit of a momentum further to the upside, but I don't think we are going to resolve to breaking the 31,000 right now as this goes. But yeah, nonetheless, don't quote me on this, because this is Bitcoin. This is the land of cryptocurrencies, and you know, once FOMO kicks in, you know, crazy maddening things can happen. And also keep in mind that there is no volume here. We are actually in price discovery mode, and you know, a lot of crazy stuff can happen. So yeah, we need to chart this. It's mandatory. If you don't do it, you're an idiot. Um, how unreasonable it seems. This is why I also chart the downside, even in an uptrend. You know, it's what you have to do. Okay, do your due diligence, and don't just copy the levels that I indicate. Do your own technical analysis. Learn to do it. At least just copy what I'm doing. You know, read your charts that are relevant for your exchange. So that, you know, there might be a premium, there might be a difference in between the exchanges, and you know, you want to have reads that are valid to where you're trading. Now I completely lost my train. So 79.2. What do we get? 24,800. So I think the blue line is actually, you know what? No, let's not make it a blue line. Let's make it a box. Let's make it a box. 24,000. That's actually good enough. That's really good. I just eyeballed that. You see that? So let's change the color coding. Let's make it blue. It's good. I hope it's good for you too. And 92.3. 92.3, 92.3. Good Lord. What does it say? Same thing. 31,000, well, even more, 31,600. Already, I think breaking 31,200 would do it. Maybe the 10-hour chart. Let's have a look at the 10-hour chart. 88 on the RSI. 88. And what does this one say? This one is a little bit lower. I'll be damned. Yeah. Now, given that the 10-hour chart is actually more relevant than the 5-hour chart, I need to go with this one. So just let's do 50. Okay. There we go. Beautiful. Beautiful, beautiful, beautiful stuff. I'm going to set a little bit of a trend line here. Yeah, because it's a nice relevant area, you know, and it's a nice thing to keep your eyes on if the trend actually starts to turn around, to be looking at where you could be expecting touches. And of course, you need to go by the RSI levels, the horizontals that you've drawn and stuff. But once you see that certain indicators start to agree, or when, for instance, one of the EMA lines, the 100, is lining up here with the yellow line, or the edge of the orange box, and price is just touching it, when some of your TA charting starts to agree with each other, then usually it's a strong signal. So cool. This is very, very nice. And yeah, we got some viewers. We got a viewer on Twitch, on DLive, and on blah 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 on YouTube. So welcome. Don't be shy, say hi. But yeah, I see that you're watching the playback, so yeah, it's gonna be hard to say hi, but nonetheless, cool. Thank you for watching, and I'm really, really happy. Now let's go over to the daily and the weekly, because today is Sunday. beautiful Sunday, very sunny day right here. And let's just go over the reads on the daily. First of all, what do we see? We see C, C, D, E. We see that actually right now we are still in a bearish divergence. Over here, we do have a bullish divergence. You could argue that it has already played out, but as long as we are not making a lower low and a local low, blah blah blah, a local low and then a lower low again, I don't think that it's yet confirmed. So on the daily, even if we pull back a little bit, we basically could still play off of this signal, which is rather interesting. And then let's go over to the weekly. And the weekly, what does the weekly say? The weekly says, you're all wrong. No, it doesn't say that. The weekly says that, you know, we have a higher high over a higher high on the RSI, which is beautiful. Basically continuation of the trend. Right here, a little bit of a bullish divergence. It's rather hard to see, but if I zoom in and here as well, it's going to be more prominent. Right here, we do have a lower low on the weekly, and we do have a higher low on the weekly as well, on the price action as well. So this is actually rather beautiful. Well, actually, this is coming from August. Imagine the run we've been seeing from since August. Very impressive. Very, very, very impressive. Now, historically speaking, looking at this section here, looking at this bull run right here, it makes me believe that at least the confirmation of the top is not in just yet. What I'd rather see is at least a retest of the down of the lower areas, then a retest of the higher areas, and actually failing to make a continuation. So this could actually be happening this week, just seeing price move down a little bit and then trying to get back up, making a higher high on the price action, and ultimately making a lower high on the RSI. This would be my signal to actually get out and to start changing my bias, because after such a run, eventually we are going to see one of these. Short season over the winter, right? Now, okay, this is enough for today. This is enough speculation. Keep it more on the shorter time frames for now. Well, you know, shorter, 1 hour, 3 hour, 5 hour. This is what I call shorter time frames, and play level by level. Take it very slowly. We are in very, very dangerous areas to be hyping ourselves and thinking that this will never break. But everything pops. Everything pops, and you need to keep it real. All right, so on this note, I will leave you for today, guys. I thank you very, very, very much for watching. Hope you enjoyed this, and I will see you tomorrow. Remember, every day, 12:30 UTC. If this time is not good for you, then type it away in the comment section so that I know. Because for me, 12:30 UTC is 1:30 in the afternoon, is just half an hour after the 12-hour close. So it gives a lot of relevance, I think, to the reads on the chart. But if this doesn't suit you, then please let me know so I can adjust accordingly. thank you very much for watching. I will see you guys tomorrow, same time, same channel. Be there, be square. Bye, guys.